Hi everyone, today I'm talking about a Netapp stock, which is a stock I mentioned in my last video. I mentioned that it could be possibly a time to go and buy that stock, and today I'm going to do a bit more of a deep dive into Netapp and talk about the company and if it's a good time to buy the stock at these prices. Now, one of the main reasons why we talk about this stock is it's because it's down 47% from its highs, which was set back in 2018. And that is kind of signaling now, is this a big massive discount? Is this a good opportunity to go buy this stock? And today I'm going to talk about why the stock is down in that position, and then I'll talk about the positives and the negatives of the stock. And towards the end of the video, I should get on to if I'm going to actually go out and buy some shares in the company Netapp. So looking at the stock chart, we can see that Netapp is down 47%, and that means it's now down at $46 a share. Now, one of the really interesting things as well that we can pick up on Netapp straight away is that it's at a 4.7% dividend yield, which is looking pretty good, and it's at a P of 10, which is definitely a P that kind of stands out. Now, with every stock that's down at a P like that, you always start to wonder, is there a reason why the stock is down at a P like that? So that's also another thing that we're going to look at. So when we look at the stock chart, we can see that it was back at highs of $86 back on September 2018. And then since then, it has gone down quite a bit. And now we're sitting about $46. And it's quite a big downtrend. And then obviously towards the end of the chart, we can see that big massive waterfall drop that's taking it down to the $46 mark, and that was pretty much because of earnings, which we will talk about in a little bit. Now, when we do see a stock chart like this, obviously we can see there's a big massive discount, and it had been on a nice run previously. So after this big waterfall drop that we've had, you know, it's kind of one of those that it might set off a falling knife trend, or this might create a support and bottom up. We don't really know, but obviously it's one of those things that it does look a big massive discount, but from here it's hard to say where the stock is going to go from now on, because it has had such a big massive decline over the last kind of year period. So if you don't know what Netapp is, it's a cloud data and also a data management company. Now, one of the big reasons it's down is because of the earnings. Previously to that, there's also been some little bit of bad news that's came out, and also there was hints that the actual quarter was going to be bad that was just reported as well. So that was kind of good. It kind of came out from the company that it was going to be a bad quarter anyway, but then the actual results of the company made everyone go, we didn't think it was actually going to be that bad. So that's what's kind of really happened. So it was down 20% on Friday, and that was pretty much because of it reporting bad numbers. And also the big thing as well was the guidance, and the guidance wasn't just bad, it was actually really terrible, and it was like worrying terrible. I haven't seen someone actually like reverse their guidance as much as this for quite a while. So the one big thing that scared everyone from the earnings report is that the 2020 revenue will decline 17% from last year. Now, obviously we were expecting somewhere around a 3 to 4% growth, and when we take that Netapp is probably the biggest reason why you're getting into that stock is because it will have a nice steady growth, and with a nice steady growth it will carry on increasing that dividend, which is not a bad dividend at 4.17%. Obviously that's a little bit high now because of the actual stock price dropping, but we were expecting still growth of 3 to 4% of revenue. Now for it to go to 3 to 4% down from a revenue decline of 17% is sending it off a big massive red flag for sure. And that's overall, when we take it into consideration, that's nearly a 20% drop on revenue. And also we are expecting EPS to decline. Of course it will, because when we've got a 17% revenue decline, that's obviously going to be affecting EPS. So that's also really bad news. So it kind of like now puts pressure on the company of like, is that dividend now at risk, which we'll talk about in a little bit. But when we invest in companies, especially dividend companies, we do like to see the dividend be secure for the next few years. And with such a massive drop, it kind of puts that dividend slightly at risk. Now, when we looked into the earnings report, Netapp's actual reason for this big massive decline was that the big clients were not spending as much money. Now, for me, when I looked into this a little bit further, we can see that a lot of the revenue comes from two specific clients, And obviously, when you rely on 2 clients, it only takes one of them or 2 of them to maybe go, oh, you know, we're not spending as much, and that will affect your company absolutely huge. Now, a few people are saying that this is market share that's been actually lost to Dell. Also, we know there's a lot of big players in this cloud business. You know, it's a great growing sector, but overall, we know there's big, massive players in that cloud sector right now, and it is quite easy for them, some of them big cloud players, to take, you know, share off each other. So one of the big worrying things for me is not that it's just a bad quarter overall. It seems like they have lost a lot of business and market share, and this is what's kind of come out in this earnings, is that the company's kind of going down, is hit a very bad patch, and it seems like they're losing market share to me, to other competitors, and that's where the big massive revenue drop has come from. Now going forward, obviously that kind of then says if we're losing big clients that are now spending money with other people, then there's a chance that them clients might not come back, and that revenue is not kind of a 1 year miss kind of thing. You know, it's nothing to do with the China trade war, for example, and potentially in the long term that will sort itself out. For me, if we're losing clients, that's a big massive red flag for me, because there's a chance that them clients might come back and we might never see that revenue actually regain share. And that's what they've said, is that it seems like to me, from what I've picked up in the earnings call, is they're now looking for new clients and not rely on big clients that are making up 20-30% of the revenue stream. They're trying to pick up more clients that just make up like 1% of the revenue stream, and that's where they're looking to go from now on. But obviously that's going to take a while to, you know, get that many clients to kind of cover the losses they've had from losing the other clients. So the dividend itself is at a 49% buyout rate, which isn't too bad, and that's had a history growth of 5 years. And it's 5 years because that is actually when they've started paying out the dividend itself. So there's not too much history to go on there, but like I say, it does have that 5-year growth of the dividend. One thing that I also saw as well is that only 0.18% of insiders actually hold shares of the company, and I've talked about this on the channel before. When I invest in a company, I always like to just check how much of the insiders are holding shares, because that kind of suggests to me is if they believe in the company so much and they know the company's going to go up, then they'll be buying a lot of shares at this price, and they'll be thinking that they're going to increase their wealth as well by buying these shares. So I like seeing what the insiders are doing. With such a low hold of, you know, insiders buying them shares, that's also another sign that makes me a little bit nervous when looking into this company. Now, the balance sheet itself is pretty healthy. I looked into the balance sheet. Now, a few people have said that these numbers might not be correct on Yahoo Finance, as I noticed, but it does say on Yahoo Finance that there is currently 3.9 billion in cash and also 1.7 billion in debt. So that's quite a healthy rate. You know, I always like to see kind of about a double cash to debt ratio, which this company has. So that's kind of good to see that. And when we look at analysts right now, their average price target is $68. And I think that this was mainly because those price targets were set before the actual earnings. And maybe over the next kind of few weeks, we might see analysts come out and cut that target. That's what I think will happen. I think a lot of this was before these actual numbers come out, and we might see a price target cut by these analysts, because it does seem a little high in my opinion. So we'll probably see them come out and cut this target in a few days, but it does at the moment signal that analysts still think it's going to be it's massively undervalued at this price. But like I said, I think that's just because after the earnings call, we might see them actually come out over the next week and update their price target for this stock. So overall, my opinion about this company is that it does have a great balance sheet. That might signal for another company to maybe come out and maybe buy out that company. You know, someone that is a major player in that kind of data area, the cloud player, your Amazon, maybe your Microsoft, maybe they might look at the company and think, you know, it's a company not in a bad position but losing customers to other competitors, so maybe we can go and buy that company. So that's one possibility that might happen with stock, but I don't think it would, but that's a possibility to consider as well. Obviously, the company seems pretty cheap at the PE ratio, and it has a nice dividend payout, and also it's on a big massive decline. And one of the big things I always say is that you always buy stocks on where you think the company is going to be going in 1 to 2 years as a long-term investor. Never take into consideration the news that has come out, because normally when the news comes out, like the big massive revenue decline, that pretty much has been all priced into the stock now. So you're kind of considering now where it's going to go from here forward. Now I'm kind of looking from a year to 2 years down the line, and you know, I do really like the company's PE. I like the dividend. I like the balance sheet of the company. But the big thing for me going forward is that to see such a big, massive revenue drop from my point of view is a bit worrying, and I feel like they could be losing market share and they might not be able to, get that revenue back, and then it kind of puts pressure on the dividend. Can they carry on increasing the dividend going forward? So for me, I'm kind of seeing where the stock goes and how the management and the company cope with how the revenue has declined so much over this last year. They've got to be looking at themselves and saying, how's our revenue and our EPS declined 20%? They've got to kind of now look at the company and see how they bounce back from that. Because for me, I think that's just a major red flag. And I kind of can't invest into this company until I see how they deal with that situation. Because it's a situation that I'm not sure if they are able to recover from just at the moment. So it's a company that I like at the moment, and I like the fundamentals of the company. I just need to see how the management reacts to this kind of revenue decrease, and maybe in a year's time, if I see the management have dealt with the situation and they're kind of turning the company around in the right way and sorting everything out. But this is kind of one of those situations where it could easily end up into a big downtrend, and the company kind of goes downhill from here. We've seen it before. So I'm kind of seeing how the company reacts, and then, like I say, maybe in a year's time, depending on the reaction from the management, this might be a company that I invest in. And also, we don't know where the stock's going to go from this, because it'll be hard to see positive news come out in the next kind of few months after it's saying how much it's struggling with, losing business realistically. So guys, that's me talking about Netapp today. Obviously, like I said earlier in the video, I'm not buying right now, but I'll probably review it in a year's time and see if it's a buy then. But it does seem, a good discount and a good company. We just don't know where it's going from now. So I hope you enjoyed the video. I hope you enjoyed the video if you're looking to go invest in Netapp, or maybe looking for a new stock, or just trying to, expand your knowledge in the stock market and learn about a new stock overall. If you could give the video a like, guys, subscribe. Thank you for the support recently. It's been absolutely amazing. And I'll see you on the next video.